Good morning, everybody. My name's David Weild, and just what I'm going to do is, in a second, I'm going to have the panelists each introduce themselves, but just so you can get your bearings, we have on my left is Joan Dromi from ComputerShare, Pamela Day from Paladin Trust, excuse me, and interesting little story about Paladin on your website there in the genesis of the name.
Yeah.
And we have Scott Purcell from Prime Trust, who I've known for quite a long time, and Jordan Davis from Tokenized, who makes us all feel incredibly old. Just by way of background, I was former vice chairman of NASDAQ. Weild & Co. runs a network investment bank. We're pushing it out to the cloud. We're in 15 states right now, growing pretty rapidly. And basic thesis is, if you know, LPL Financial is doing the same thing for investment banking. But in investment banking, unlike individual financial management, people really ultimately need to collaborate, because every deal that you do is a project, and you need to optimize project teams as a consequence. So I think we've got 70 professionals now and 70 active engagements, and we're hoping to grow it to thousands of people. And the social impact aspect is we're filling that void in emerging growth and middle market companies, but we're also able to take women that left the workforce from Goldman Sachs and had 3 kids. They're now in first grade, want to get back in, and they need to be home with local to the kids. We'd like them to come back into the workforce, get them relicensed, because their M&A skills that they learned at Goldman obviously are incredibly valuable, and offer that alternative as opposed to going and running, becoming the 60th residential real estate broker in a Westchester or West Coast suburb. I'm going to go from your left to right. Joan, you want to kick it off? And I'm going to ask everybody for a minute on themselves and a minute on the company that they're currently with.
I'm Joan Dromi. I'm with ComputerShare. My background at ComputerShare is somewhat varied. I've been there for a bit. I have a technology background, and also have, over the past almost 4 years, been running their private markets group, which focused mainly on companies that were raising capital under the Jobs Act, doing Reg A Plus offerings, and of course now token securities offerings are kind of the newest twist on things. So in that role, basically, I've been working on both product development and business development, and hence have been dragging ComputerShare kicking and screaming into blockchain space along with a couple of my colleagues. My background also includes some venture capital and real estate investment banking work. And ComputerShare itself is, I think globally, we're the largest stock transfer agent. We also provide a host of governance services of various kinds for both public and private companies across the globe. We operate in about 20 countries. And I would say my general description of what we do is we do the unglamorous things. It's the back-end plumbing and the kind of, I guess, down-to-earth details about investor communications and providing transparency and a bit of, I guess, comfort to investors in who holds the securities and how the securities get transferred, whether that's in the new way through distributed ledger technology or whether it's the old-fashioned way. Pamela, you're up next.
I'm Pamela Day. I'm the junior version of Joan, I think. I am the CEO and founder of Paladin Trust. Paladin Trust started about 2.5 years ago. We're a custodian shop, and we were, I believe, the first to really marry an immediate hedging function to taking in capital. So I got into this space. My original job was investment banking back in New York, creating real securities. When I started investing in digital assets, I realized what an absolute mess the issuance was, and that there were kind of tried and true procedures that we already knew, that we built over the last 200 years in the securities industry, that we could apply to the space. So I always call Paladin Trust the adult supervision in the crypto room. It's now coming to pass that there's a lot more adult supervision, and I'm really excited to see all of that happening. We are now at a very interesting place at Paladin. What I personally believe has been holding back our industry, and certainly the securities tokens industry, is having a true SEC-approved qualified custodian so that the big money can come in. Oftentimes their mandates don't allow it. And we've spent a lot of time the last 9 months helping the state of Wyoming draft their recent crypto banking bill. And we believe this time next year we will be the first actual, truly approved crypto and fiat bank that the SEC will provide true acceptance as a qualified custodian.
Scott?
I'm Scott Purcell, CEO and founder and Chief Trust Officer for Prime Trust. My background, I've owned a number of broker-dealers, clearing firms. I started a trust company a long time ago catering to fixed-income institutional investors and their broker-dealers who service them. I wound up selling that to Commerce Bank Group. I ran trust at Commerce Bank Group. Read an article about a kid named Mark Andreessen at the University of Illinois. I'd written a graphical window on the internet thing, whatever that was. And I went on to raise about $100 million of venture capital and built one of the very first commercial internet service providers. The router that we collectively bought is from a little startup called Cisco, is now in the Smithsonian. So I kind of date myself that I'm old enough to have something in the Smithsonian. I read about, and this is where David and I started to get to know each other, the Entrepreneurs Access to Capital Act in November of 2011, going through the House of Representatives, later to become the Jobs Act in the Senate. And I said, holy crap, they're gonna allow people to use the internet to raise money for their businesses and capital formation, and this could lead into trading. This is banking, securities, technology, internet, all the things that I know. I need to do this. And so I funded a company, or started a company called Prime Trust, provided a lot of guidance to the SEC as they were crafting the rules around the Jobs Act. A lot of my letters are in the rules. And quickly built into what has now become Prime Trust, another trust company where we provide, relevant to this conference in particular, we provide securities escrow, compliance as a service, which is AML, KYC, broker-dealer compliance for Reg A, Reg D, Reg S, Reg CF, S1, S11. As of this morning, we had 1,457 offerings live in our system. So we do this a lot at scale with technology. Our customers are typically crowdfunding portals, real estate syndicators, Start Engine, Republic, T0, OKX, all these are, and more are our customers. We work with Tokenized, Harbor and Polymath and a lot of the people in the space. So we provide a lot of securities escrow, we provide a lot of custody, exchange services, OTC desk services, and a variety of different things. We're having a lot of fun. We do it on a B2B basis. We don't work typically, we certainly don't work with consumers directly, and really we don't work with issuers or customers directly. They come in through our broker-dealer and business relationships.
So my background is not going to be as long as anybody's here, but I started out my career in financial services on the retail side, so doing wealth planning with high net worth individuals. And a year ago, I met the CEO and founder of our company, Mason, and he said, hey, how would you like to be a part of the revolution of this new financial services system, as opposed to selling mutual funds that were created years and years ago. And I jumped on the opportunity, so I've been here for about a year. I work for Tokenized. We provide technology for issuers to do compliant global securities offerings that are based on blockchain. It's been a really exciting ride. I know I've worked with ComputerShare in the past, and I was kind of joking around on our call before where it was quite a pain to actually transfer assets from ComputerShare to my previous company, Fidelity. And then, 6 months later, I'm sitting there talking about, blockchain, and it's been pretty exciting.
So I'm going to run through, thank you, Jordan. I'm going to run through just a little bit of a structured format. We're going to talk first a little bit about U.S. versus international and whether or not the United States is being left in the dust, what's going on outside the country. I want to flip it to a little bit about private, where we are in private markets, and then public markets, which I think is, I think where everybody sort of generally agrees that if we get into public markets broadly with full-blown listings, that there's going to be a lot of money that comes into the structure. And then finally, we're going to run over and talk a little bit about listed versus in the public markets, listed versus over-the-counter, traded versus non-traded tokens, if we will. So, so let me. I think I know, Scott, you've got some some feelings about that in your writing. You sent out an outlook for 2019, wherein you predicted that basically all sorts of things were going to be tokenized.
The tokenization of everything.
The token. Okay, there we go. But that I think that you were lamenting too. I think that you thought that the United States was being disadvantaged by the reticence of the Securities and Exchange Commission. You want to elaborate on that a little bit?
Well, a lot of what I say parrots much of what you say and have been saying for many years. You know, the U.S., our regulatory regime compared to other countries is problematic because the SEC in some cases may be slow, in some cases may interpret new technologies and new markets through a historic lens that just doesn't apply. Other times they're hamstrung by legacy congressional acts that they have to work within, and they can't do things, versus other countries like what we're seeing out of Singapore, or even what we're seeing out of London and the UK and different markets, where the regulators are very proactive in working with the markets, not just taking people to task, quickly by regulatory standards, quickly creating legislation and rules to help nurture the markets. You know, at the dawn of the internet, I was our industry trade appointee to Congress, working with the Clinton administration to keep Congress from regulating this thing called the internet so it could just grow and become what it has become. We don't have any such luck with blockchain industry.
Perfect. And Joan, as the largest transfer agent in the world, you guys have I would imagine, a global view, and you are a transfer agent, I think, to a very large percentage of the Fortune 500. Is that fair?
That would be fair. I think we have 30-something out of the Fortune 50 and a good chunk of the Fortune 500. It's a majority. I would say on the public side,
yeah,
we're not seeing really anything at all in terms of token securities offerings. I've worked...
That's even in Europe, even outside...
Not that I know of. I haven't seen any exposure to that. The UK has been more progressive by a long shot than the US in both crowdfunding and token securities. But still, I would say it's a very slow adoption in certain respects. Seeing a lot of activity in Israel.
Right.
Very interesting things going on from a capital formation standpoint.
Highest ratio of PhDs per capita of any country in the world. Yeah.
A lot of smart people get things done. And I think Scott's correct in saying that our regulatory environment is glacially slow, might be kind, and when you drag FINRA into it, it's like watching molasses run uphill. Right. I know plenty of companies that are waiting for approval on ATS platforms, and that doesn't seem to be forthcoming. So I think things have been slow to develop. There's been plenty of enforcement action and not as much positive guidance. It's been very, I think, general. Companies that I see getting things done, usually their Securities Counsel and the issuer, have met with the SEC multiple times in order to say, here's what we'd like to do.
Right.
Is it okay to do it this way? And things like that seem to make progress, but that's a very slow way to get the ship out of port.
Right. I mean, before I ask Pam her view, because she's on the forefront of trying to enable some of the custody in a public markets basis, but I'm on the board of INX, which is an Israeli exchange. It's got an F1 filed, an advisor to Templum, and also working with a Chinese company called Daoler, which has just changed its name to 55. But it's got pretty heavy backing. And what I'm seeing with documents that are being pushed through the SEC is that they are working through them, very deliberately. I think that they're very risk averse because they understand that the first group that comes through is going to establish a series of precedents. And I would argue that the United States has a little bit of a protect investors first kind of philosophy.
Very much.
And because we're the largest capital market still is essentially in the world, there's a little bit of a first do no harm kind of perspective, but also knowing that if you are transparent and get it done right, that ultimately the capital base is so large here that sometimes, being a fast follower or even a not so fast follower as opposed to a first mover in something like this may be actually a better strategy for the country. But Pam, you're on the forefront of trying to push custody through in public markets.
Yeah, so I'll take the counter argument, the unpopular one here, and I'll defend the SEC for a moment to say, I'm not sure that we had the infrastructure really 2 years ago for these to be approved and stamped by the SEC. I think we are just getting there now and having these types of business relationships with the institutional fund administrators, stock transfer agents, folks like us who realized, yep, we're going to have to be a stock transfer agent, which we are. We're going to have to work with the SEC, not to convince them to change their definition of what a qualified custodian is, but rather to make ourselves into their definition. And they're doing what they can to protect the investor, right? I've heard the word nurture up here. The SEC, no one ever says the word nurture with the SEC. The SEC is not a nurturing environment. Don't ever expect them to be. They're also not creative individuals. They're not paid to do that. So their job is to wait for us to bring them solutions to say, yes, no. That works, that doesn't. That fits with the box, that doesn't fit with the box. So I'm actually appreciative. We've spent our company's lifetime thus far trying to skate to where we thought the SEC wanted us to go. And I believe that once we have the proper structure, the proper banking structure to properly hold and manage and exchange these types of securities, in conjunction with a fair amount of insurance, okay, then the SEC will say, now you're okay. So I actually appreciate that they're keeping the rails on the bowling alley here, than not letting us throw a gutter ball.
Yeah, I see, like what she said, the problem is often the SEC will be willing to work through it, but then if FINRA gets involved, you have a problem. We've had to go through this with our custody services in numerous fronts. For escrow, it's 15C24. For regular offerings, it's escrow in custody under Reg CF on others.
Right.
And getting the SEC on board was pretty easy. Getting FINRA on board was very hard.
Yes.
As qualified custodian under 40 Act issues, it's very clear trust companies can do that. That's not a problem.
But the
It's a little harder.
SEC says there are 3 different laws, and you got to meet them all, and no one right now does.
Actually-
That's the problem.
Depends on how you look at it. Our attorneys look at it differently.
Doesn't matter what the attorneys think. It matters
And
what
I
the
can-
SEC says.
and I
So
can
if
say-
the SEC says you're not, you're not.
And I can say this, one of the problems with the ATS applications is, FINRA and also the SEC going, well, under the 34 Act,
Yep.
trust company is not a typical qualified custodian.
It's
but
not.
We've now gotten the SEC through that, and we've been approved as the qualified custodian for some ATSs. So that's happening.
Well, from what the SEC tells us, they do not recognize one entity in the United States as being a proper qualified custodian to hold and manage any of those securities. So they are not going after
A
anybody.
34 Act qualified custodian, there's none that exists yet, and that's
It's
kind
just
of what everybody...
typically clearing
There's
firms.
3
We had to go through a
different
very
laws.
long legal analysis to get this through on behalf of some of our customers.
Right.
And it just recently did that.
You did, okay. I mean, it's kind of the issue, which is there's a lot of stuff percolating over at the SEC. And, there, in fact, I was talking to Arnold Golub, who is the head of listings and hearing review at NASDAQ. This was quite a long time ago about deals that were on file with NASDAQ that were set up as securities that check the transfer agent box, but were convertible into tokens when things were pretty hot. I never saw any of them that I'm aware of come through the other end. And so it's been a very, very, very kind of slow process, and there's not a lot of sort of yet guidance. But my guess is that at some point there's going to be a bit of a watershed event, a breaking of the dam, so to speak, and we're going to start to see enough of this stuff come through that people will start to have options.
Well, that's why I think we believe that event is not us trying to beat the SEC and get a letter from them, but to just say, what do you want us to be? You want us to be a bank? Great. So we went the completely other route, and we wrote the law to say, great, we got the law approved, now we're a bank with a capital B. All right, if you want us to be a bank, and that fits all the boxes, you want us to change all the UCC laws for bailment and how those are going to be held in custody, we did all that too. So now, instead of going, that's a great route. We just went another route and said, you got it, you wanted us to be a bank, now we're a proper bank. And that changes not just what the SEC says, but what the large institutional funds say. When they say in their mandate, we can't hold this stuff yet, unless you look like this. So we decided to look like that.
Jordan, tell us about your customer base. Is it all domestic, or is it any international? Where are you competing? And you're providing solutions to institutional.
Yeah, we are. So we're providing technology support on the primary issuance phase of offering a digital security, on the custody component, and then also in the post-issuance compliance management. So the administrative functions of issuing a security, the ability to be able to revoke, to reissue, et cetera, those are all problems that are still being solved. And that's why we have a pretty interesting perspective on the industry, in that we're not, meeting with FINRA or SEC all the time, but we're meeting with people like you, who are trying to deal with it, and you're trying to develop technology solutions that can meet the requirements of regulators. So we have, in terms of clients that we've worked with, all of our clients are issuing what regulators deem a security. So for example, if they're offering something in the US, it's been under 506C, 506B, whether it's a blockchain-based utility or it's a dividend-paying security, they're following SEC guidelines for onboarding investors, for custodying these assets, and then for distributing them.
So I want to come back to the custody issue for a second, and I want to ask, what are the three things that you have to provide according to the SEC to be a 34 Act compliant custodian?
You have to meet the three separate laws, right? There are three laws that describe them. One is the Investor Protection Act, the Securities Act, and then I guess the third act, I don't even remember the three laws are. And the problem is that they are slightly different. So there are folks that qualify under one but not the other two, or two but not the third. One designation gets you all three, and that's being a bank. If you're a bank with a capital B, no other definition, a true bank, you've got a direct access to the Fed, you've got a Fed funds account, then you qualify.
Is there a concern, on the security side with tokens at the SEC and hacking, 51% assaults, in rewriting the ledger, the replacement of lost tokens, just like there would be with replacement of lost securities? Has that been
What they were mainly concerned about when we were drafting it, now maybe the thoughts have advanced because this was now 9 months ago, was bailment, was the law regarding how these are held. You can't hold the securities in like a, one big omnibus account. So they were really concerned about bankruptcy laws. So that's why we had to rewrite the UCC laws in the state of Wyoming as well in order to fit with the bailment requirements.
Scott, I want to throw a curveball at you. There's this sort of, march to issue tokens as securities. That's what the conference is about. But if I'm an issuer, and this is something I've worked with all my life, priced 1,000 public equity offerings when I ran equity capital markets at a top 10 firm, the investors want what the investors want, and some of them don't want to touch tokens now, and so you have that option right now in traditional securities to have something which is in street name or in book entry, you make decisions about it, in some cases to take physical delivery, which is increasingly a little antiquated. I mean, why do I not hear tokenization platforms working to provide all those alternatives, including tokens, to issuers to maximize the breadth of the distribution and to allow people ultimately, if they want to then make good delivery of their certificate, this is the analogy, to then put it into street name or exchange a token out for a certificate or for a DTC option. Why have I not heard that being discussed broadly in the marketplace?
Because it really hasn't existed. We're doing it now. We've created extensive APIs to enable that for our customers. Traditionally, when an investor invests in something, if you go buy shares of Apple stock, you don't want Apple to send you stock certificates. Nobody takes delivery of the securities themselves. And you want them held in your account at E-Trade or Schwab. You want to be able to log on and, see a list of things. And that's called, that's a traditional securities custodian. And in the private markets, it just hasn't existed where you've been able to have a custodian holding private securities. Traditional clearing firms won't do it. Pershing, Broadcourt, RBC, none of these firms will do it. ComputerShare built a really nifty way for people to have DRS, direct registration, and still be able to affect some trades. But typically, and that was for the Reg A space in particular, but it's not been an option for people to hold private securities in an account with a custodian. And now that this is there for our customers, our crowdfunding portals, broker-dealers, real estate syndicators, and others, everybody wants to do this because, okay, it's easy. Then later, if an investor, if a customer wants direct delivery of their securities, then they can request it, and they might get a paper certificate. They might get a security token, but most likely they're not going to want direct delivery. And so that's now becoming an option. There's always going to be some people that want to hold the securities themselves, whether it's shares, pieces of paper, or tokens. But by and large, I see a migration to custodian holding, and that's effective not only for the market in general, it's also effective for avoiding 12G. There's a lot of good reasons for it.
So let's talk about, for a second, blue sky in general. And most of what's being issued right now in tokens of all sorts are being done in the over-the-counter market, right? And in the United States, in order for brokers generally to be able to solicit trades, they have to pass blue sky. And in order to pass blue sky, you have to be listed on a major stock exchange, of which, as far as I know, the two that confer a blue sky exemption are NASDAQ and the New York Stock Exchange. Maybe Brad Katsuyama's firm has that now. I don't know. Maybe BATS, I'm not sure. But they don't have a big listings business. But typically in those markets, to your point, you automatically, once you're listed, you're a 12G filer, right? And you also, I think by exchange requirements, need a transfer agent, right? So I don't think that there's anything yet in the rules that says that you can be NASDAQ listed with a token and not have a transfer agent.
And you still need a settlement with a seat on that exchange. You still need a custodial broker, not an E-Trade broker. They actually don't hold the securities. Pershing or BNY Mellon actually holds them. You need a clearer.
Well, you need a DTC member firm. You have to have a DTC
Yeah, so
member.
that member has to have a seat on that exchange. So if we were to do that, we would have to go buy a seat on that exchange just to hold those securities.
Also remember
which isn't
the
the case in regular crypto.
The
but in
entire
crypto, it's-
plumbing for the infrastructure, if you're going to be listed on NASDAQ or if you're going to be a DTC member company, you deliver a piece of paper to DTC. You deliver a paper stock certificate. They are not yet, they're working on it, but they're not yet equipped to take a token. So if you're going to go public, if you're going to trade on NASDAQ, if you're going to be a DTC-issued security that can go into the clearing infrastructure, you are going to issue a paper certificate.
I look at this as having two sides. You have the public markets, and DTC is sort of the central plumbing for all of that. The central plumbing is not ready for tokens. I was working with a NASDAQ-listed company that wanted to issue a token offering, and they actually wanted to issue it to their existing holders with some rights for an income stream. We were unable to do it because you couldn't be made DTC eligible because they are not ready to accept token securities. They're simply not set up for it yet. And as Scott said, they are working on it. So on the public side right now, tokens have no place to go in the plumbing system. But on the, I'll call it private side, in private placements, people are setting up independent ATS platforms where token securities are accepted. There is no DTC for that. So from my standpoint, we've been building integrations with platforms like that because, in essence, everybody's trading either in house accounts or in registered name. But again, the plumbing has to exist for the records to be kept, and the way the SEC is currently looking at it, and the premise that we're operating under is we're keeping the ownership register and working in concert with the DLT technology where the transactions are occurring. And one of the things that happens when you get
So
down...
you're mirroring, is that?
We are,
Yeah.
essentially. Like, we're pushing out an allocation to the DLT, the initial allocation, the initial issuance, and then anything that happens subsequent to that has to happen within certain rules. One of the things that this new ecosystem does is it changes some of the roles and responsibilities, but all the nuts and bolts are essentially the same. You have to verify the investor's identity. You have to verify that they have authority to transact. You have to verify that the restrictions are either you're trading within the restrictions or you're not allowed to trade, in which case the smart contract might reject it up front. But there are also things that can happen off the chain that the DLT has to be updated to. So if someone serves the transfer agent with a court order because of an estate dispute or a divorce settlement, puts a stop trade on someone's account, that's different than a securities restriction. It's not in the smart contract. So that the transfer agent has to notify the ledger, hey, so-and-so's account has to be blocked. So you have to work in concert. And it's not to say that it couldn't all be done within the same technology, but right now it's not. Mm-hmm. And there is also that sort of kind of independent provider. I mean, as a transfer agent, the SEC is holding us responsible to the investors and keeping the ownership ledger. We're not just responsible to the issuer, we're also responsible to the regulators, and we provide an interface for the investors. So,
Well, there's a lot of comfort if you're a regulator and there's a throat to choke.
always.
Yeah.
Yes. So, I mean, from my standpoint, too, there's some risk in dealing in this because, as I think Pam pointed out, you need certain sureties in place. So if you look at how things work on the public side with the DRS system, broker-dealers have insurance against wrongful trades. You need the same thing on the ledger side of the world. You need surety that if a wrongful transfer occurs, or if there's, you mentioned, hacking and so forth. I call it how I spent my summer vacation working on contracts with a fleet of lawyers last year. And we had an interesting discussion about stealing, and I think you and I talked about it a little bit. You can talk about, 50 ways to steal your tokens. I don't want to name them all in a contract. Stealing is stealing, lost is lost, stolen is stolen. Let's keep it at the high level because we have traditional processes and ways of dealing with that. So do you need to reinvent a new one? If you do, you might be leaving out some new way of stealing that could happen next year.
Right, but I mean, said another way, we've been developing securities laws and protections for 100 years, and
Right.
and they're pretty well thought through. The corporate governance, the corporate actions, everything that's related, and so then the question is, are you going to afford all of that wisdom and those protections in a more automated, centralized kind of format or not? And I think it's probably taking a while for everybody to go through and figure out what all those boxes are, because we take them for granted, and to figure out then how to go down and check each of them. I think that's a little bit of what's going on.
That's a lot of what's going on.
For those of you who don't know, I mean, Jay Clayton is the SEC chair, is a really interesting guy. I mean, he was a deal lawyer and priced a lot. I was over in his office in September, and I ran an equity syndicate, equity capital markets group years ago, and the guy had, and I've known every SEC chair going all the way back to Arthur Levitt, and this is the first guy that I sort of almost felt like he could have done my job pricing deals and trading them in the aftermarket. He was very insightful. He also has an engineering background, right? And I don't know that most people understand that. So he's the furthest thing, if you will, from a Luddite. He just has to, move an institution along, and I think that going back to the first tenet, first do no harm. I want to take a real switch, and I want to go down, and I want a prediction from each of you folks about what's going to happen in 2019. We're sitting here a year from now, and what do you expect to see that's markedly different than what we're witnessing today in the markets? Who wants to go first?
I'll go first, for sure. This time next year, we believe that the bank that we've built and are building will be that watershed moment for the big money to come in, the very, very big institutions to come in. At that point, hopefully, we'll have been working with your company for a while to build more of that infrastructure, and you'll start to see every bond offering. Probably not equities yet, because equities will still trade like LP units, but every bond offering, every collateralized debt offering, there's no reason why it won't be on a system like we're building now.
And more efficient to pay a coupon through a token than it is through a traditional security.
And to settle it straight to fiat and have all of that built, I think that we will have a big step towards that vision.
Yeah, I mean, it's interesting. I mean, it's a little bit of historical trivia here, but when T0, Patrick Byrne, I gave him the advice not to do an equity, which was the first, token offering because of exactly that reason. Stocks have to trade,
yeah,
and they have to be in everybody's accounts. People are used to fixed income trading by appointment only, and then also you have that efficiency of getting the distribution nominated in someone's account.
Think about collateralized debt obligations. When we roll up all of those pieces of debt and all of those income streams and all that, putting that into this type of structure, those will be the first ones to move.
Jordan.
I believe you're going to see more traditional family name financial services companies not only get into the space, but move from doing little POCs to actually launching some products. Or not products, but services. And it's going to be really exciting for all of us.
Scott.
I think, like our bantering back and forth, I think this year we'll see more of the regulatory uncertainties starting to settle. Not completely settled, but it'll start to become clearer. You'll also see a lot more foundational things mature in this sector. What guys like Tokensoft and Harbor and Polymath and Securities, and the middle layer, the infrastructure things will mature, and people will be able to easily build and launch these offerings. The custodians will get better, the software will get better. We'll see ATS starting to launch trading of private securities and private assets, both domestically in the U.S. and globally. And it really lays the foundation for what's about to happen in the future.
Joan.
I think you'll see securities trading in the private placement markets on a couple of ATSs, and I think, like anything else, there will be, a couple of notable successes in that. And because of that, I think some of these infrastructure pieces, as people work through the nuts and bolts and get down in the weeds and find out what's working and what's not, I think the infrastructure will fall in place more, and I'm hopeful for some standardization, Because right now, it's a little bit like stock option world. It's amateur night at the races.
Yeah.
Everyone has a different method.
It's a patchwork quilt. And
Exactly.
It's a lot of confusion, and it makes it difficult for people to
Not
adopt.
very
and know-
efficient.
Yeah, that's exactly right. I got a little bit of time. Are there any questions out for the panel? Out in the put everybody on spot. Okay. And I would add, just from a market structure standpoint, you know, when you look at microcap securities, there are it's what academics call asymmetrical order book securities: big seller, no buyer, right? And what happens is, if you're a stock and you're in that situation, you don't trade very well unless there is economic incentive in the aftermarket to support, which there hasn't been in public markets since the SEC collapsed trading spreads and commissions. It's why we see so few small IPOs in this country today. So as a consequence, if you look at the securities that do trade well, it tends to be things that have dividends or coupons. So real estate as a class, it's the bonds, and so you know, my prediction is that those will be the first that really emerge in the market. You know, because there are some real efficiencies to drive that. They're also going to innately trade better, even in the over-the-counter market, than a stock will. Because just because something's a token doesn't mean that it's going to overcome the basic laws of market structure, particularly if it's a microcap token.
Yeah, but
100%
I think what you might see is a couple of really interesting revenue stream investments, because there are things that could potentially deliver great revenues that you're not seeing right now in the public markets, and you probably won't. But whether it's IP or patents or income.
Royalties.
Yeah, one of our customers, Trust Token, they're famous for having true USD, but the very first thing they ever tokenized was a song royalty. And it's now starting, because everything comes through us, it's now starting to
deliver
return
results.
royalties to the investors. And it's really cool.
That's exciting.
Yeah.
That's where I think you'll see some notable successes is, I guess I'll say oddball things like that traditionally haven't been securitized. But now you can, like whether it's an income stream from sale of a drug that successfully goes through trials, or whether it's patent technology that's maybe unused on a company's books, you can monetize that value and sell it.
Yeah.
So I think there'll be some really creative things.
I want to say thank you to the panelists for a terrific panel. Round of applause.